Hello traders, welcome back to another episode. In this video, I want to show you how to easily understand market structure without any complications, without using any fancy words, without any animations, or just without wasting your time, all right? If you're having a hard time marking your charts correctly, you came to the right video. Let's get into it. First, we're going to start with illustrations, and then we're going to go to the real chart piece by piece. This video is not going to be more than 15 to 20 minutes, so be patient until the end of it. Here we have an uptrend market structure. When the market is trending to the upside, it creates what we call a higher high, higher low. Each time the higher low higher than the higher than the previous highs. You can see this high is low, this high is higher than the previous high, and this higher low is higher than the previous highs. This is what we call higher lows. All right, so this one we call it higher lows. Let me write it down here. Higher low. Let's take this and put it right here. So this is what we call a higher low, and then this higher low also higher than the previous high. This high low also higher than the previous high, and the highs over here is what we call higher highs. Anytime price breaks a structure to the upside, this is what we call a break of a structure. We're gonna go ahead and put this break of a structure up here. Break of a structure stands for break of highs or break of lows. Each time price creates an impulsive and breaking a higher high or a higher low, we call this a break of a structure. All right, so we have one break of a structure, price created a high high, we have another break of a structure, and then we have another break of a structure. Very simple. This part here is what we call higher highs. Higher highs. Anytime price breaks a previous high, we're gonna go ahead and mark it. You don't have to do this on your charts, but this is just for educational purposes so that you understand the whole concept of market structure. This whole thing that you see in front of you is what we call a market structure. This is called higher high. This is called higher low. And on a downtrend market is going to be different. So this is how an uptrend market structure pretty much looks like. Anytime the market creates a higher high, it creates what we call a higher low. And the higher low is what we call the pullback. This is the pullback. This is the pullback, and this is the pullback. All right, the pullback is basically the internal market structure. When the price creates a higher highs, it has to rest and recollect orders again. So it creates what we call a pullback. It comes back to a demand zone. All right, it comes back to a demand zone, and then price creates another higher high again, and then comes back to another demand zone again within the impulse leg. All right, so your demand zone pretty much is in between the higher low and the higher high. Always the higher low and the higher high, between it is where you find your demand zones. When price comes back, this is what it does. Price will come back pretty much like this on the lower time frame. Let's say, for example, this is your higher time frame market structure, which is an uptrend. You already identified price creating higher high, higher low, higher high, higher low, higher high, higher low. Each high higher than the previous higher highs, and each higher low higher than the previous higher low. When you go to the lower time frame, let's say this is your pullback back to the demand zone. So the pullback is what we call the internal market structure, and this is where, once you identify this on the higher time frame, like the 4 hours or the 1 hour, depending on what type of trader you are. If you are a day trader, you find this on your 4 hour time frame, you refine it on your 1 hour time frame, then you go to the 15-minute time frame, and then after that you wait for price to return back to a valid demand zone. Once the price comes back to a valid demand zone on the 15-minute time frame, you wait for what we call a change of character. Here, if you see, we can see price creating an internal high, lower highs, lower lows. This is where the confusion happens. This is where you have to be able to understand this entire lower high, lower low is an internal market structure, and the overall market is uptrend. When the price takes out the last lower high led to the lower low, you're going to go ahead and mark what we call your change of character. Change of character basically means a reversal. You don't need to confuse anything. You don't need to use crazy words or whatever it is. All this change of character means is a reversal, a change of bias. If market was trending to the upside, realigning with the higher time frame uptrend, now price came to what we call a demand zone, and now it created a change of character. Once the price created a change of character, we wait for a price to come back to the demand zone that was created within this move here on the 15-minute time frame. After the break of a structure, the price comes back to the demand zone on the lower time frame, and then we're going to go ahead and realign our bias with the higher time frame market structure. You put your stop loss, you execute the trade right there, you put your stop loss right beneath, and then you target the upper highs, which is here, because once the price takes out this high, now it's going to take out this high eventually. All right, so this is how you mark your uptrend market structure. Let me reverse this and turn it into a downtrend market structure. Let's change the color. Change the color here to red to match the uptrend, the downtrend market structure. All right, so on a downtrend market, price does something different. All right, so this is going to be what we call a lower low. This is the lower low. Delete this. Delete this. We're just going to go ahead and clone this. So each time price is in a downtrend market structure, it creates what we call a lower high, and lower low. Delete this. Okay, lower high, lower low. Lower high, lower low is what it creates in a downtrend market structure. All right, here we have a price creating a low, lower than the previous low, a high, lower high, higher than the previous lower high, or lower than the previous lower high, and then this one lower than the previous lower high. Each lower high is always lower than the previous lower high, and each lower low is lower than the previous lower low. You can see this lower low is lower than the previous low, and this lower low is lower than the previous lower low, and this low is lower than the previous lower low. Each time the price was also creating a break of a structure. Anytime price breaks a structure, which is a lower low, a previous lower low, we mark this as a break of a structure, which means a continuation to the downside, and this is a downtrend market structure. So lower high, lower low, lower high, lower low, lower high, lower low. For example, if price eventually trades above this lower high, this is when we say now we have what we call a reversal, and then now we look for an uptrend market structure. All right, good. So lower high, lower low. For a lower time frame, for a downtrend market structure, it creates what we call a supply zone. Let's say this is your high time frame market structure. This is going to be how it's going to look like on the 15-minute time frame. Once the price hits a higher time frame supply zone, we're going to go ahead and wait for a change of character, which is a reversal or realign with the overall trend. price creates a change of character. Now we wait for the price to go back to a lower time frame supply zone, and then we're gonna put our entry over here, stop loss above the lower high, and then we're gonna target the outside lower low. Each time price is trending to the downside, it has to break the previous lower low. So this is what we're going to be targeting, our first break of structure, and then we're going to go into a break even, which you set your stop loss to your entry. This is what we call a break even, okay, to protect yourself if the market reverses back to the highs over here and then creates a change of character to the upside. So you always have to set your stop loss. Once the price moves away from your entry, you set your stop loss to a break even, which is your entry price. If you entered the price at 1.27214 and price moves away, what you're going to do is you're going to set your stop loss to your entry price. Look at your MT4 or your trading platform, and then find your entry price and use that as your stop loss once the price moves away from the area of your entry. All right, so this is how it looks like on a downtrend. Now let's go to the chart and start with an uptrend. Put the market back to where it was. All right, we're going to start with a downtrend market structure first. First, we have to identify what happened on the side. We can see price was creating a low high, high low, higher high. This was your last break of a structure for uptrend, and then price ended up creating a change of character. Okay, price creating a change of character. So this was your last lower high, led to higher low, led to the higher high. You can see price reacting to this demand zone here, and then price didn't move that much. He came back to reverse to create a change of character. All right, here is your last lower high, high low, led to the higher high. Eventually price created a change of character, which is a reversal to the downside. This was first an uptrend market structure. See price creating a low, a higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then higher low, higher high, higher low, higher high, higher low, and then price creating a higher high, finally higher low, and then higher high. After that, we have what we call a change of character. Once we get this change of character, we wait for the price to reverse back to a what we call a supply zone on the higher time frame. Okay, once the price go back to a higher time frame supply zone, higher high, higher low, higher high. Well, the question is, when the price hits over here, you know that you're gonna have to look for a down move to realign with the overall market structure. We have a change of character already. So once the price hits over here, you go to the lower time frame. You go to the 15-minute time frame. If you go to the 15-minute time frame, everything becomes very obvious. Zoom. If you go to the 15-minute time frame, everything becomes very obvious. As you can see, on the lower time frame, the 15-minute time frame, price created a higher high, higher low, and then higher high. Price hits a higher time frame supply zone. Then we wait for a change of character. Once we have this change of character, we're going to go ahead and realign with the overall market structure. We can see this was our supply zone on the lower time frame. We take our entry over here, put our stop loss over here, and then target the 4 hours lower low market structure. Now we have another break of structure right there. Okay, now we have another break of structure. Once we get this break of structure, price created a lower low. Once the price created a lower low, what happened after that? Price went back to reverse to a higher time frame supply zone. Once the price went back to the higher time supply zone, we're gonna go to the 15-minute time frame and wait for a change of character. We're gonna wait for a change of character. All right, everything becomes very obvious. Patience is what it takes to become professional in this market. If you're not patient and you're looking for quick money, you will eventually lose and run away from these markets. So you have to be very patient. We can see price creating high low, high high, high low, and then last high high. After that, we can see price creating what we call a change of character on the 15-minute time frame. After that, we're going to go ahead and mark our 15 minutes supply zone to execute our trades. And then we're going to put our entry is going to be right there. A stop loss right above the high. About, let's say about 10 pips to be safe. 10 pips is your safest zone, depending on how precise is your entry. And then on the 4-hour time frame, you have two choices. You can let me make the trade thing a little bit wider. All right. That was the first one. It's better if I cut the price, but I don't want to do that. Okay, let's find this. Beautiful. Make it wider. Make that wider. Now let's go to the 4-hour time frame. If you go to the 4-hour time frame, you go ahead and target this lower low here, because once the price hits a higher time frame supply zone after a break of structure, you can see this is the reversal. You put your stop loss back up there on the 15-minute time frame, and now your target is going to be this low here. That is almost, depending on what kind of trader you are, this is about 188 pips, but it takes a lot of patience. It takes a lot of patience. This market, you're not going to win if you're always hesitating and you're not good at executing. Okay, so on the 4-hour time frame, still we are in a downtrend market structure. Now we're trading from here to here. We're trading from here to here. Market coming all the way down here, creating a short lower high, high low, low high left to lower low. We're gonna go ahead and mark our break of structure here again. We're gonna go ahead and mark our another break of structure right here again. Okay, what price did was two things. We have an empty area of supply zone. Price didn't do that much. It reacted for a little bit and then traded to the upside. But this is where we have now our last lower high led to lower low. Here we have what we call a change of character. A change of character pretty much means a reversal or a change of bias. If price was trending to the downside, if it breaks the last lower high, low to lower low, and it creates a higher high, instead of price respecting this high, price drove through it and created a higher high. Now what we're looking for is a demand zone. All right, price hits a demand zone. Once the price hits a demand zone, now we're going to go to the 15-minute time frame. You can go to the 15-minute time frame, you can go to the 5-minute time frame, depending on how aggressive you are as a trader. If you want to be a very patient trader, it's good to take your entries from the 15-minute time frame to be less risky. So on the 15-minute time frame, you can see the lower high led to lower low, another lower high led to lower low, and then eventually we ended up getting a change of character on the 15-minute time frame. And this is our confirmation for a realignment with the overall trend, or a change of character from the pullback that was coming to the high time frame demand zone. Now we're gonna go ahead and take our entry right there, right here. Price ended up taking this liquidity here. We execute our trade over here, and then once we execute our trade right there, which is a very precise, put your stop loss right here, 10 pips minimum to be safe. Now let's go to the 4-hour time frame and target the high, which is right there. We're gonna target the high that created the pullback down to the demand zone. This is the whole internal market structure that created the pullback. So we had the high, and then we had the pullback back to the higher time frame demand zone. Our target is going to be right there. All right, and then how you manage your trade is basically, that's going to be another video, but for now we're going to focus on market structure and how to identify high highs, high lows, break of structures, change of characters, supply and demands within the market structure. Specifically, I'm going to make another video about that, how to mark your supply and demand zones within the market structure. So now we have that already. We're going to go ahead and mark our break of structure again, because price created another break of structure, breaking this high here. This break of structure, we're going to go ahead and mark it, break of structure. Price created a higher high, price created a higher high. Now price traded back to a demand zone on the higher time frame. 15-minute time frame, go. You need to have a confirmation. Confirmation is very important as a trader. Remember that, guys. So you always have to have a confirmation before you execute any trade. Okay, we have a lower high led to lower low, lower high. Let's see if anything happened over here. Okay, lower high, and then we have a lower low. After that, we have what we call a change of character. Price comes back to test a higher time frame, a lower time frame, demand zone. You execute your trade over here, go long right there, put your stop loss beneath. You can refine this to the in the lower 5-minute time frame or the 1-minute time frame if you wanted to, if you want to be more aggressive. This is only an example, educational purposes. You go ahead and use your logic and your risk tolerance. So now we're going to go ahead and target the high before the pullback. Okay, this pullback came from here, so we're going to go ahead and target this as our take profit. When the price moves around maybe like 2 candles or something, we're going to go ahead and set our stop loss back to our entry if we wanted to be safe. Now we have another break of structure. We have another break of structure. High low, price created another high, and then higher low, price reversing from this. There was an imbalance over here. There was an imbalance right there. That's going to be for another video. All right, so this is the high that ended up reversing the price to the downside. When we go to the lower time frame, we wait for a change of character. Let's say price is coming down to let's say this is our demand zone. This is price coming back to a demand zone. We wait for a change of character on the lower time frame. Let price come back to a lower time frame demand zone, and then we execute targeting the higher time frame highs that led to the lower low, like this highs here that created this higher low or pullback. So if I go to the lower time frame on this, clearly it's going to be very simple without any confusion, but you have to be very patient when it comes to waiting your momentum. And remember, you're not going to trade outside of London or New York session. If you are trading this according to professional traders, if you're trading this during Asian session, you're just wasting your time and money. All right, so this 15-minute time frame, we can see price created a high, low. After that, we had a change of character. This is the last high low that led to the low low. Once we get this change of character, we went ahead and marked our demand zone here. Okay, we went ahead and marked our demand zone here, took our trade right there, stop loss 18 pips this time, target this high over here if you wanted to be safe. So you can see this was pretty much 89 pips in profit. Now let's go to the 4-hour time frame again. If you go to the 4-hour time frame, you can see price created a manipulation. It used this higher low led to the higher high as a manipulation because price did not close above. It was kind of risky. It didn't close above the higher high. It wicked out. You can see the pressure coming from the upside. Sellers pressure in the market, and they used this later on. Or of course, you already took your trade anyways, but later on, the sellers came into the market aggressively, using this as a liquidity hunt or stop loss. What do you call it? Inducement, and then they executed another trade on this gap over here because there was a pressure that needed to be filled anyways. You can see that there was a pressure and this was an imbalance market here that need to be filled. Price came back all the way down to fill this imbalance. Then there was another trade that was executed right there, targeting this highs. Okay, you took the trade, you exit over here. All right, so that is how you trade a uptrend market structure. Another time here we have another break of a structure. Let me delete this real quick. We had another break of a structure here, another break of a structure. Once we get this break of a structure, we can see price coming back aggressively to a demand zone with an imbalance. There was a imbalance between this high and this low, so price came back all the way down to test the imbalance, and then this is going to be our higher high. Price was trading between this higher low to this higher high. So from here to here is where the market was trading. This is what we call the internal market structure. Price comes back to a higher time frame demand zone. Now go to the 15-minute time frame without any problems. Once you go to the 15-minute time frame, things become very clear, as I showed you earlier, without any confusion. You don't need to confuse yourself. You just have to be very patient. Of course, you have to imply with supply and demand zones, liquidity zones. All of these things come after you understand market structure. So this was the last lower high. Last lower high led to lower low, lower high led to lower low, and then right after that we had what we call a change of character. Once we get this change of character, we have a clear demand zone right here. We're gonna go ahead and execute our entry right here. Put our stop loss beneath around this time 13 bips or so. We're gonna go to the 4-hour time frame. Once we go to the 4-hour time frame, we're gonna target this high This was the last high before the pullback. So this high is where the buy side liquidity is sitting. Okay, we're gonna target right there, this high right here. So once the price reaches this high, we have two choices. The two choices that we have is either we take our profit or set our profit right there and then move our stop loss to break even and trail, keep trailing each candle. Okay, you can trail it professionally so that you don't end up losing all of your profit. Okay, I'm gonna make another video about how to trail your stop loss with the markets. Okay, I'm gonna make another video about that. And in this case, for next week, we're expecting a reversal, which is, today is Sunday, so tomorrow Monday, we're expecting some sort of continuation from here to the upside. We'll see what happens. Okay, because we can see this was taken out as a liquidity. We can see price testing an empty area of demand zone right here. So we are expecting some sort of continuation to the upside to target these highs here. Again, my name is Jamal. Welcome back to FOREXSOM. I do really appreciate your time, the time that you spent with me today here watching this episode. If you haven't followed us, please go ahead and subscribe to the channel. If you have any suggestions of what I should make next, put that in the comment section. All the links are going to be in the description down below. Check out my premium smart money trading ebook. You can find the link down below and join our free Telegram. Also, be aware of the scammers who are asking for money, because I will never send you a message or send you a Telegram message asking for money or whatever. I never do that. So be aware of those scammers. Until next time, stay legendary. Peace.